Welcome back to Krown's Crypto Cave. Wish you a very happy and healthy start to your Sunday morning over here from bright and sunny Helsinki, Finland. It is 24/7 bright and sun skies right now. No cloud in the sky is what I'm trying to say. Jesus Christ, man, I can't speak. Had a little bit of a weird night myself last night, but all good. Anyways, want to follow up on yesterday's analysis as we actually did see Bitcoin start to head down the short-term stripper pole, which was interesting. I was not expecting that to happen over the weekend, but I do want to follow up on that, and that actually does start to really confirm some biases, especially on medium-term timeframes, which is really starting to kind of like tip the odds in the favor of, well, you probably know where I'm going with that. Anyways, so my point is that today's going to be really a big focus on preparation for this upcoming trading week, of which CME is opening back up at 5 p.m. Central Standard Time tonight. I think is going to offer up some very interesting things to be aware of coming into the trading day today. Anyways, on top of that, I want to put the focus on the Krown Trade application, which can be found at app.krowntrading.net. It is 100% free and all sorts of new cool stuff that is here that you should check out if you're so interested. Anyways, on the open interest tab, we do see that it is still maintaining, and not just maintaining, but also increasing as price action decreases, and that essentially helps confirm this change of behavior that we've been seeing from the medium-term timeframes. However, the high-term timeframes are still, well, no, we'll get into that with specific examples soon enough. But my point is that I want to make here is that we saw a move above that critical region of 1.75 billion when Bitcoin started to break down a little bit below, especially 9,300, I believe it was. That is further confirmed and enhanced that this is a good read on price action, getting the overall feeling of the potential reversal on the higher term timeframes in progress right now as open interest continues to grow in line with price action decreasing. So with that said, we can all see that Bitcoin dominance is increasing as well, suggesting that, well, not suggesting, but saying that all of the Bitcoin pairs that alts are marked off against are losing value as Bitcoin comes down. This is typically also what you do see during those kind of phase changes. And we are seeing the the fear and greed index also tick down about 3 points as well, still kind of maintaining that range. So let's get into the actual, oh, I also forgot to mention, for the 1st of July, what day is it? It's the 28th. It's whatever fucking day it is. Okay, I'm looking at my calendar right now. It's the 28th. It's 28th. On the 1st of July, in 3 days, actually, we're going to be running a sale on all of the programs, actually even the Jewel as well. And so if you actually do have the Jewel, we'll actually just kind of grandfather you into a discount. You won't have to do anything. I misspoke yesterday when speaking about that, but you won't have to do anything. As long as you're signed up, you'll actually just receive a discount. We'll likely just, I don't know, send you, we'll figure it out. Anyways, perhaps I'll be wrong on that, and I'll have another announcement to make on that, but that's what we've kind of decided on for right now. So yeah, you know, if you're considering investing in any one of those programs, just wait a few days and it's going to be a lot less expensive. So there you go. Anyways, looking at the actual price action right here. Let's get off the fucking crack trader timeframes. I don't know why I even have that one available. But looking at the daily right here, technically speaking, Bitcoin, did it break our long-term rising support trend line with yesterday's daily total closure? Technically, yes, it did. And where do we bounce off the 236 fib right here? And right now, what is Bitcoin doing essentially? Well, we're not seeing immediate follow through, but that's not necessarily what that trend line implies. What that trend line implies is a change of behavior, which with open interest increasing, as we just kind of referenced to, plus breaking that area, it's not a death sentence in and of itself, but it really does help the downside case here. And while I do think that things probably pop back up, maybe sometime around that CME's open later today at 5 p.m. Central Standard Time, or tomorrow's New York Stock Exchange open, we probably do come back up and maybe fill the gap on CME closure from Friday at about 9,200-ish region. Now, keep in mind, it does have about a $50 premium on price action, so maybe that correlates more so with like 91.50 on spot price action. As long as we're below there, it is still just that. Just kind of like a refilling of the gap, and then time to maybe have continuation after the weekend direction kind of showing a little bit more than typically you do see on the weekends. But my point here is, and sorry, I need to actually address something, because for whatever reason, people seem to really mishear me on this, or maybe I do a bad job of explaining, because every time that I go into the fucking Discord, I always see this idea postulated. Krown says big moves never happen on Bitcoin over the weekend. That's not what I'm saying at all. What I'm saying is we've actually never seen a reversal to the macro direction, or even to like a higher term timeframes direction that happens over the weekend that then gets sustained over the next trading week. ever since CMEs debuted in December 2017. Before then, yes, we've seen that. Yep, absolutely. But since then, because that is the professional venue that everything else is, it's actually not marked off of, it's marked to. But my point is that we just haven't seen that since then. So in this case right here, if we were to have a reversal that was essentially confirmed over the weekend, that would be a little bit maybe problematic. But because Bitcoin is still technically not in that land, it's not in that territory, we really have to, take out this low right here. That's actually still very much viable and still very much still very much there. That's not to say that you can't have big moves over the weekend. You certainly can, and we actually have seen in the past, but it's with the former trend, with the former especially macro trend. But usually, you look at like a daily or a weekly to get that. So that's kind of the point that I'm making. So I really hope that can hopefully clear some things up there, because it's it's just one of those things, man. If people keep on saying that, then it's probably my fault for expressing it improperly, rather than like they're like this, they just misheard, right? But fair enough. Anyways, so as far as the relevancy of it, it's still very much the same here. And I actually do look at this as a nice pivot point going forwards, and actually do think that Bitcoin is, especially with the action of last night, it will eventually break down here. Taking out that last low that we saw at 14th of July was not good in any way, shape, or form. I would like to really see this during CME's trading hours. However, this happening over the weekend is very likely good enough for me, because now we have multiple things going on here. We do have a daily reversal confirmed. There's your high, there's your lower high. Do you want to call this your low? You can call this a lower series of lows right here. There's your next lower high right there. So 3 lower highs in a row, and then this is whatever we're doing over here is obviously going to be ending up to be a lower low as well. So this is problematic. Now, does that mean that we're not going to have bounces along the way? No, of course we are. And in fact, I think that we probably have one where we are right now, off the 236 at 8900-ish region, also the cyan 89 expense moving average on the daily right here, and also kind of like that last little liquid zone that we saw before that last two major lows ago that we had in late May. So all of that lines up pretty damn well with each other. Of course, with CME's opening a little bit later today, it's very likely that we do, pop back up and fill somewhere around the gap, somewhere around where they closed on Friday. Doesn't need to be exact, but in the 9150s, maybe 9200-ish region, which to me would very likely be an opportunity, depending upon how I can manage risk on it. So looking at that area from maybe like a short-term time frame on spot price action, I think that would correlate very, 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 very well. It just so happens to be, as you typically will notice, in line with this rising support trend line that we have on this ascending triangle, the proverbial ascending triangle that was technically broken on yesterday's closure. So no longer do the Bulaws have this ascending triangle in play. I'm sure that someone's going to say, but Krown, this can form a higher low right here. Yes, you're right. It can form a higher low, and I actually do think it's. I mean, sorry, not a higher low, because it's technically not. But as far as this formation goes, yes, you'd still have that kind of higher low structure, and you could kind of like squint your eyes and make an ascending triangle. But I found whenever I do that, especially in Bitcoin land and in Forex land as well, it does not work out very well. And so making excuses for price action after critical areas have been broken is just a big no-no in my book. So while I do think that the short-term timeframes will very likely bounce around here, maybe even getting all the way back up to like 9250 or 9300-ish region, the direction is really starting to set in motion right now, as we do see daily stocks start to once again turn back down after rejecting an even more aggressive rejection off the top resistance of this formation right here. Sorry, formation, wrong word to use. I don't believe in formations on Stokes. I do believe in trend lines, of which I do kind of consider that one a test of the topside trend line. Not only that, but we are back in the bearish control zone on daily Joule and on daily RSI, and on daily Joule, that continuation hodl your short signal is very much playing out. So we got a decent signal right here, continuation, or another decent signal right here, depending upon how aggressive you are, confirmation or extra confirmation right here, and then a hodl your short signal right here as Bitcoin breaks below a major support trend line. Even though I don't necessarily like diagonals, this was the bullish look on price action, essentially continuation of that uptrend, and forming in that in the bounds, in the boundaries of that ascending triangle, which is a bullish reaccumulation formation. Doesn't mean that's always going to break out to the upside, as you can see right here, and by breaking back down below, that destroys that as an idea. It's no longer there for myself anymore. Like I said, I know that people will argue against that. Fair enough. To each their own. I'm just sharing what's worked in in my experience. And that when you start breaking that sort of thing, you start making excuses for price action, that's when you get into trouble as a risk manager. And keep in mind now that Bitcoin can rally up all the way to 7,500, or sorry, not even 7,500. It can rally up all the way to 9,700 and is still just a lower high. And now we have a trend of lower highs. 3 does mark a trend, and lower lows in progress, of which the second one might get put in right here, and then we pop back up, put in a lower high somewhere in this region right here, and then come down and make that third lower low. So all of this is working with each other, and I do believe that we actually are going to see this break to the downside with the advent of the price action that we saw last night. So a lot of things to be aware of here. It doesn't mean that I just blindly short into what's going on right now, which is another fucking thing that I see in like the comment section and like Discord sometimes. Like, man, understand that these, like, if you're trading a fucking daily, trade a fucking daily, for the love of fucking God, man. If you're trading a daily and then you go down to an hourly or below, or just even like a 4 hour, what do you think the relevancy is of that time frame to what you're looking at on a daily? It's literally, if you're even going to a 4 hour, 6x the time frame, or divisible by 6, and for an hourly, 24. Like, fucking blows my mind, man. Anyways, looking at the daily right here, is there anything else to be aware of? I'm sure that someone's drawing a fucking falling pizza on this. It's not a fucking falling pizza, for the love of fucking God, man. If you're drawing a falling pizza like this, you stop it. You stop it. If you're drawing it like this, also stop it. You can't even make it fit. You can't even make a fucking fit. Like, just stop. It's not going to always be a fucking falling pizza. Believe me, I want to see some Jesus toast that shows me some bullish things as well. As a trader, it's no fucking secret that it's way easier to trade a bull market than a bear market. No fucking doubt about it. But for the love of God, man, this is a bearish read right here. Looking at historical volatility percentile, we are, wow. Okay, so here's something that I want to show you right now. With the historical volatility percentile, it is suggesting that actually we are incredibly close to a move. And I know I've been saying that for the last couple of weeks because it's been incredibly low, but this is the first actionable area that we've actually seen that typically does produce the beginning of a big bad move. Let me explain. When the moving average gets down and actually even starts to touch around where the historical volatility percentile is, meaning that the moving average is now equal to, the moving average is quite literally equal to what the historical volatility percentile is right now, which is in the fucking single digits, if I could remind you, at 5. It's been a 5 read, and multiple days actually had a 0 read last week. Anytime that we see the moving average on this kind of tested after getting very, very far down there, well, that's the beginning of your move. Going back here to late September 2019, that was the same read that we saw before. Oh, fuck. That was the same read that we saw again, right? Or sorry, no, the same one. To the upside right here in March 2019, again, moving average coming down, touches it after being contracted for a very long time, after a 3-month contraction phase. And well, you can do the math on that one. It's 4,000 all the way to 14,000. We have another example kind of built up over time on this read right here in October 2018. Multiple zero reads, then moves up, tests the, I wouldn't say it's not testing the moving average on it. That's not the way to think of it. But it's just a good idea to know that like this is like so fucking far out of the realm of normality that it's extremely likely that we get a move. And so I would say we're very likely to have the next big move, probably extremely likely this week, probably even in the next few days. And again, this area right here this one actually did kind of take a while to get going, but you can see once it did start to meet once the moving average was essentially equal to the historical volatility percentile, that's when you did start to actually gain momentum to the downside and really expand. And this was again like a 50% move to the downside. So very much very much an interesting move from a trader's perspective. Also have another one right here. On this $10,000 high. A lot of these examples just tend to happen to come to the downside, which is, well, it's not always going to mean that it's downside, but same thing going back on over here as well. So as far as what we're looking at right now, I think that it'd be very, 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 very likely to expect this formation to have a full move coming into this next week. And I'd be looking for this move on a historical volatility percentile read to meet somewhere within this trend line. It doesn't need to be exact. This should really be more of a regression than anything, but technically it's anywhere around like the 55 to a 75 read in this area right here would be good enough. And I'd say that that's going to be the next short-term low or high. It could still be that we see this expansion coming to the upside. The same areas essentially apply, but I don't think that that's what's happening here. I do think that Bitcoin is breaking down. If Bitcoin could break back above, let's call it 9250, close a 4-hour dildo above there, I would look for extension to 9500. But again, that doesn't do anything for the macro, only does something for the very short-term time frames. Wait, what the fuck? Hold on. Sorry, something weird's going on right here. Oh no. Damn. Oh well, whatever. Anyways, I just got word from my chef that there's no steak. Motherfucker, I'm fucking hungry, man. Anyways, like I've been saying, for the upside, still need to see 9,900 broken and on at least a 4-hour closure, preferably a 12-hour or daily, to get at anything worth excited of working our way back up towards 11,000 or even 10,500. But of course, there are trades to be made along the way. Above 92.50, I look for a move to 95. Above 95, I look for a move somewhere between 98 and 99, and then that's the fuckboy range once again, which I'm not really interested in. I'd really rather wait for a break above here before trading like the real upside if that were to happen. I just don't think that that's what's going on right here. I think that Bitcoin is in the process of rolling over the next few weeks. Looking at the 12-hour Stokes, we are going to see them head down as well. Obviously, these things are pretty damn cooked right now. So I don't think that we see this move like happen today. I think that we probably see it happen sometime this week, if anything. I mean, it could also be that it doesn't happen, but looking around the horn right now, most timeframes are pretty, most timeframes are actually pretty damn cooked on momentum velocities. We are going to see 4-hour Stokes head back down after rejection, getting out of the bearish control zone. Let's see what price action would be needed to kind of hold them back down below there. Yeah, as long as they're below 9,000, essentially, momentum on the 4-hour remains to the downside. For the 3-hour, it's actually kind of counter to that, showing that we probably put in a local low here at 8,900. As long as Bitcoin closes next 3-hour dildo above there, we will actually see the short-term momentum flip back around, which I think is kind of more probably in line with what we're going to see today. 2-hour showing about the same thing, 9,000, and we'll open back up to the upside, or gain momentum to the upside, I should say. And on an hourly closure, showing 89.39 to the downside. So getting this range pretty damn well, to be fair, and we can kind of siphon this down and pretty much make it into two major things. Below this area right here, obviously, below 89.50, or we could even just take that last prior hourly closing low at 8,900. Below there, yes, I would expect to see continuation for another $150 down to 8,700-ish region. By the same token, if Bitcoin can close this next 4-hour dildo, especially above like 9,050, then I'd look for another bounce at the very least to like 9150, maybe even 9250 up here. I don't have a strong opinion on that. My strong opinion is on this area right here. This area right here and this area right here to the upside. To the downside, it's a game of playing bounces off support, I suppose. If you want to play that game, I'd just be more interested in shorting, I suppose. But bounce is very likely to happen. I mean, kind of where we are at now, to be fair, around the 236. But next one, I'd be looking at somewhere right around 8550-ish region. Or sorry, I did say 8700. Very, 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 very short term though. I don't think that's a huge area. I will plot it out here just for purpose, just to be thorough. Where's my 8,700 level? There it is. And then below there, I'd look at 8,550. 8,550 is a big one just because that is kind of your major low for this formation on 10th of May. So I do think that we'd play out a little bit of bounce there. How high does the bounce get? I don't have an opinion on these. It'd be the same resistances that we're kind of breaking through on the way down as we'd see on the way up. So I'd just be looking for short-term plays there. Below 8,550 is where things start to get quite fun though, as I would look for a quick move down to 8,150-ish region, the 382 fib. I think that's also the daily, got to be some on the daily. Actually, 8,550 is something on the daily. That's actually the 200 exponential moving average right here. 200 simple is actually working its way quite a bit above the 382. So maybe there's some on the weekly there. Yeah, weekly 55s right around there actually. So very interesting. So I would be looking for a bounce around there as well. 8150. I don't think that that's a potential reversal point though. Technically speaking, there is a measure move to be made on the counter break of this formation, which does point all the way down to the 0.5 at 7,500. Also a nice historical area as well, as it was the big accumulation zone that we saw in end of 2019 before this nice run of $3,000. Also a big breakout right here more recently in April 2020 before this big run for about $3,000 as well. Pretty damn good. That's potential reversal zone. But personally speaking, I actually do think that things would head a little bit lower, down towards a 618, somewhere around 6,900, just a better number overall. So I'm biased in that direction, but overall, the levels come first and foremost, and I would completely revert this whole analysis, and I will turn back into a Bula, especially back above 9,900, but even making a higher high above 9,700 high right here would probably be pretty damn good as well. Hard to ignore for sure, as that would be a pretty nasty fake out, and that would very likely be precipitated, or obviously it'd be precipitated by, but extremely likely to happen if we even just saw like a 4-hour closure in this blue box right here at about 9,500. I do think that it would kind of flip back around. But again, my point is that this is right at as of right now, with the damage that's been done over this weekend, I do think that the trend is just slowly but surely kind of reverting here on the macro. Looking at the volume signature for this formation as a whole, if you are looking at this as an ascending triangle, you're looking at a resolution date. I mean, it's there. Anytime these things get 75% full, they are incredibly likely to break, and it is 75% full, maybe even more. Doesn't mean that's always going to happen. We're just going off statistics here, but statistics have kept me safe for the majority of my career, which is all that I need. You don't need to be perfect; you just need to understand statistics, I suppose. So as far as that goes, I'd still kind of take these things one step at a time. This is getting a little bit too far ahead of myself than I really prefer to do. But overall, a lot of things lining up. So resolution extremely likely this week, not just from a volume perspective, but also a formation perspective, and also a historical volatility percentile perspective. And keep in mind that this is all coming along with each other while daily momentum oscillators are turning down here. And I believe that our 2-day and 3-day are also in jeopardy as well. Now, not particularly, as we're just seeing 2-day kind of like dive the whole way through. What about the 3-day? 3-day, same thing. Same thing here. Now, I would say on the 2-day, I would not put it past Bitcoin to just like fall through the 200 simple on this test right here. That's why I do think that we bounce up first. I don't really have a bounce target on this, like I said. Tentatively speaking, I think 9150 is very likely, or 9150 to 9200 is very likely. Above there, above 9250 especially, I'd look for a 9500 to get tested though. The next big thing that I want to put the focus on is the weekly, of course. The weekly is the big bad one right here, as the weekly really does look like it's kind of toppling a bit, especially if it closed below the 10 simple today. This 10 simple is 90.50, so it will actually have a chance to close above, especially considering that CMEs will likely it'll likely kind of dictate where we see around. But of course, I'd want to see that one in real time. Problem is, I'm gonna be asleep as fuck, and I just realized I forgot to charge my phone. I'm back. All right. So what's also interesting about weekly is we're going to see weekly Stokes extremely likely cross the downside. This will inevitably happen if Bitcoin closes this weekly anywhere below 94.50. Does that mean that it's going to happen? No. It's just if we close below there, then yes, it will. And seeing as CME's already closed below there, 92.20 on Friday, and we're already kind of seeing continuation from that read last night, or at least from my last night, it's very likely that we do see that. And what's interesting about this read right here is that anytime that we've seen the weekly Stokes cross down from this region, anywhere above the critical zone, it's not been good for Bulas. Last time that we had was obviously May 2019. That was on this $14,000 high right here. It took a while for it to, come back down, of course, but there's your 44% move right there. Time before that we saw was in the bull market of 2016 to 2018, essentially, and that was throughout this whole run right here. which actually I'll get rid of this for right now. But that, that got all these major downs right here, even in the context of a major, massive macro bull market, which is, you would expect that your bearish reads during that would not be as nasty. Well, to be fair, the long-term trend was certainly up, but as you see right there, that produced a 38% pullback, bro. This one right here, 36.75% pullback. If you have that big of a pullback in traditional markets, that's called a crash, by the way. 34.5% right here. So if you're wondering why people from traditional markets think that Bitcoin is like kind of silly as a store of value, well, that might be why. 41.80% right there on that one. Nice little pullback, bro. Got another pullback for you right here. Have a nice 39.75% red dildo in your face. And then again at 20,000, which we already know how that one ended up. So, on average, we've seen between like 35 to 40, and on the higher end, like 50%, and on like the kind of an outlier end, like 70%, maybe even more. Pullbacks to the downside off that read. And just kind of playing around with numbers here. Again, also keeping in mind that historical volatility percentile read on the daily. And keeping things kind of more or less sequestered for, I would say that, if we were to even shave off 30% off this price action, right? For perspective, that would put Bitcoin back down around 7150 or even around like 7,500, which are both kind of around my targeted areas. If we were to pull back 35%, that would actually be 6,800-ish region. I do believe that below that level, things do get really problematic for the long term. I could be wrong in that for sure, and I'd want to see it in real time, but tentatively speaking, that's where things really start to look quite nasty. 40% puts us at the 200 simple, right around 6,100. 50% puts us at the last prior low, actually even a little bit lower. So new weekly lows. I mean, and this weekly trend is down. It's down. It's down. It's fucking down. Sorry, Bitcoin, but you do look like shit. So yeah, just a pullback, bro. But again, I want to see these things in real time. I don't want to sound like I'm just getting into like macro bearish right here. I'm looking for a bounce right here in the short term. I mean, I was looking for a bounce yesterday as well. I was obviously wrong about that. I mean, we did get a little bit of a bounce to be fair, but not really what I was looking for. I was looking for that to probably pop back up and test around like 92 or something, which I do think Bitcoin's going to do probably here. It's just, the damage has kind of been done as far as the structure goes. So let's also go check out the 2-week. I'm curious what the bi-weekly looks like right here. Bi-weekly also kind of confirming a local top. I would really like to see a close below. If we especially even close this below 8,900, this would be a very obvious I would say macro reversal. I mean, this is just trend, man, just fucking trend. No divergence to be spoken about here. So there is, there's a little bit of hope. There's a little bit of hope there. And then also the other hopium that I can kind of give you as well is from the monthly. The monthly is not really problematic here at all, actually. And it's really not problematic until you go back down below, 6,400 realistically. That does leave quite a bit of space here to kind of fill out. But keep note where the 21 exponential moving average is. It's at 7,700, 7,800-ish region, which is kind of around those mid sevens. And we are going to see momentum also is very likely maintained to the upside, although I take that back. Hold on. Let me explain. The reason why I might take that back is because, let's see. Yes. So monthly Stokes will actually cross back to the downside if we do close below 89.50, which is literally like $50 away from where price action is right now in 3 days. Okay, that would definitely change things up quite a bit. Looking at monthly RSI, we're literally at the price point where it does cross back down below the exponential on it. Although this one's a little bit less damning. It's not. I don't really have as much to make out of that. And the monthly Joule, we don't have a forecast tool for this, so it might actually give you a chain of behavior right there as well. But there's not enough history there to really even care to begin with. So I don't really trust the Joule on the monthly, anyways. Daily's good, lower time frame's good. Monthly, not so much. On Bitcoin, on other assets, probably, yeah. If they have, assuming that they have 20 years of history or more. Okay, all right. Also keep an eye out for NASDAQ open later today too, for NASDAQ futures, I should say. Any sort of man, this one's difficult. If we do have continuation below last week's low at 98.24 and a quarter, I very likely would look for another test of the 10 simple at 9400-ish region, and that's likely going to set it up for a week, a downside week, probably testing ultimately somewhere down around the very low 9,000. It's like 9,000 even, actually, maybe even all the way down to like 8850-ish region. So are we looking at a reversal here? Yeah, possible. I mean, bearish divergence is present here on weekly RSI, but it's not confirmed just yet. So we haven't confirmed this as a local high. So how do we confirm this as a local high? Well, right now it's a shooting star dildo. So if we do take out the low side of it, then yes, very, 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 very likely. And those things do tend to work quite well in traditional markets. Going back to Bitcoin over here, weekly's damn close to breaking the exponential as well. In fact, if it closed anywhere here or lower, it certainly will. Let's see how much time has transpired. Already 30 minutes. Oh, nice one. All right, so let's go check out probabilities, huh? Okay. Hey, probabilities, stop. Well, yeah, that's right. It is right. Sorry, I'm, like I said, a little bit of lack of sleep, maybe not the best for me. Okay, so here's the problem: is that we can use some ranges for the upside. It's just not very relevant to like anything other than fucking super low shitty time frames. 4-hour death cross, by the way, as well. So there's that. So we're going to zero. Just kidding. We'll actually do a little bit of a deep dive in that in a second. Okay, so I would be looking again, like I said, at 9250. If you want to be more conservative, 9300 as a short-term pivot. Yes, you could also probably use 9150, but I look at that area as more of an area of fuckery. It's too small deltas, and it doesn't do anything for myself. Of course, there's people out there who are going to trade it, and you probably will be right. Using that same sort of knowledge that I'm kind of coming at it from right here. But for me, it's just, I'm not interested in that. This is, of course, not financial advice, but I'll still use 93. I'll use 9300 at the upside. To the downside, I mean, to me, it's already kind of happened. I guess if you want to take like the next major step down, if you want to take the next major step down, I'd be using this pivot right here at about 80. Well, we could just call it 8750. The last prior low. This is really not, in my opinion, like even that relevant to what's going on right now, because I mean, as you can see, even the fucking downside from this price point, which is technically further away from this price. Actually, no, it's not. It's 250 away. Yeah, the upside's $300 away, but the downside's more likely from a probability standpoint. The thing is that at that point, the second that Bitcoin takes out 8,700 to the downside, there's no more. It's confirmed reversal on all time frames up to a weekly, because a weekly never really changed. To be fair. It's been down since mostly 2018 really, but my point is that to me the damage has already been done here. To the upside, 9300 does not change around the trend. It just changed around the short term change of behavior, and I would look for an extension to like 9500-ish region. That's where things could change around again and present another interesting edge for myself. And I do think that things are going to test up here, probably somewhere around 9150, maybe even all the way up to 9250-ish region. But as long as we're closing 4-hour dildos, especially below 9250 or 9300, to me, it's just another failed rally, another anemic rally. If it can get back above there, I look for extension to 95. If it can get back above there, then I look for extension to somewhere in between this region right here, with the same implications that we've been saying for the last couple months above 9,900. It's really all that it comes down to. Spend a lot of patience within this region. I don't see any bullish divergence forming here on the lows thus far. I'm sure that someone's going to say, but Krown, this point and this point, and then this point right here. Yes, well, you'll find that those ones are so far back, being almost 2 weeks now away on a 4-hour dildo time frame. I wouldn't trust it, although it's very likely to get a short-term bounce here. Okay, cool. So let's go look at let's go do this for a second as well. Okay. Okay, so the 4-hour has officially death crossed, right? And with the 4-hour death crossing, there are fake outs on this, of course, as with any indication. But with price action kind of having like a bearish consolidation right here at the top of a pretty phenomenal run, we do see some interesting things, right, from a historical standpoint. Now, like I said, fake outs do happen. You see some great examples right here. We get multiple crosses both ways before Bitcoin really starts to accelerate to the upside. Fair enough. But the trend here, as you can see, pretty much always remains to the upside. Higher lows being printed along the way, generally good. On this example right here, Bitcoin puts in about a 2-month long consolidation. Sounds familiar. And once it crosses the downside, yes, it does pop back up quite a bit and test it, but overall, the momentum is still maintained all the way down. It's not always going to be that good, though. This one over here, perfect test, boom, massive move up, $3,000, lovely. This one over here, perfect test right here. This one's very reminiscent of what we're doing right now, coming in after a nice top being put in, then getting your first leg down as they cross, and then as the bearish consolidation, which over here just looks like a nice little descending triangle, happens, kind of forcing it back down through. This one producing, let's actually start to measure these out, 27.25. This one over here produced, this one's kind of unfair to be, this one's 48%. It's not really fair though. This one over here takes us all the way from September 9th at 10.3 down here, or sorry, here, about 30% retracement. This one over here takes you all the way from 3,500 to 14,000, not bad. This one over here, and actually there are several right here as well, and these probably look like failed attempts, but they actually weren't. Like, look at this. This one gives you the cross right there. That's a 11.5% move in like 2 days. Then this one right here gives you this move right here, 15%, 15.25. This one right here gives you this move, 14.5%. You know, you can see that adds up very quickly. Those are like big moves. 4-hour death cross takes us all the way from September 2018 to where we ended up in 3,100. You know, again, these look like bad. This was the only really bad signal right here. And even this one actually did give you a gainer from that next pop up to next low, 11%. This one right here, another failed rally, but still, that's 17%. This is assuming that you trade it perfectly. Obviously, it's not going to be that way. But even with that in mind, I mean, you know, like I've been saying, like kind of like the damage is being implied. This one right here, another 36%. You get where I'm going with this. Anyways, my point is that looking at where we are right now, if we were to even play out just a little bit of that, even just like 10% of that, you know, as it does get on a bad signal, what does that do? That implies a lower low. I mean, that's kind of the point that I'm making right now, is that a lot of the damage has been done. We're seeing the short-term, what's called moving averages start to really suggest some downside. We're seeing the higher-term timeframes momentum also suggest some downside, all at the same time, usually going to be coupled with historical volatility percentile in this case, and well, and just overall formations here as well, and all these things kind of adding up with each other, suggesting that yeah, I do think that Bitcoin is going to overall break down. The only thing that could make me kind of switch my mind here is the monthly. The monthly says don't get too bearish, especially if a couple criteria are met, which we won't know until actually July opens for the accumulation distribution indicator on you know, to kind of view that on a monthly, because that does seem to hold some really heavy weight with the long-term direction. But for right now, it is still pointed north, you know, but it's obviously not going to change. So we don't have any data for it, and there's no way to, or at least I don't have a way to forecast it. I'd keep an intent eye on CMEs as well. If CMEs pop back down and take out this low from 14th of June, which spot has already done, CME has not, then that would be extremely damning as well. For what it's worth right now, CME is actually the more Bula-ish chart, because it is technically not broken this rising support trend line for your proverbial ascending triangle. So it's still very much in the cards right there. That's why I do really hesitate to get extremely bearish right here, even though spot has followed through. But I do think that spot is going to get things right this go around. I do think that it's on the right track. Let's go check out the Bitcoin dominance chart as well. I did say that I would check that out. Let's go see what he's doing. Looking like he's putting a nice little low right here. I'd be looking for this to lift back up as well. Probably test the top side of the long-term formation, which is still one massive descending broadening wedge. Probably back up here towards 6-7.5%. And that means that most shitcoins, I mean, altcoins, going to be falling versus the Bitcoin at Satoshi pairing. Let's look at Cardano. Yeah, so you know, this is the lovely thing about trading altcoins, that you know, coming into this week, to be fair, I you know, as I've been saying, I would have been bullish on this, but as always, Bitcoin's direction supersedes whatever the fuck this thing's doing. And what's the long-term direction on this? It's a dead heartbeat. It's a dead fucking heartbeat. What's the long-term direction on this? I mean, this is not even a dead heartbeat. This is like still dying. This is still dying, man. Terrible, absolutely terrible. What's this one look like? This one actually doesn't look so bad, but another rejection from the top side of resistance certainly doesn't bode to all that well, and I would be looking for this to come back down to the bottom side of the range. This could work out longer term though, if I'm going to be bullish on an altcoin, to be fair, versus Bitcoin pairing. But the other ones look terrible. Let's look at Stellar maybe. I mean, another macro high right here. Great. What about Ripple? Ripple versus Satoshis. Ooh. If you loved it at 16,000 Satoshis, you're gonna absolutely fucking love it at 600 Satoshis. It's great. And versus the dollar. I mean, these are, that's what the chart really looks like. Bullish. And this is not financial advice. I'm not a financial advisor. And holy shit, there's still people talking about how it's going to take over the world. Well, I sincerely hope that works out for you. Beanie Babies will be there to greet you. Anyways, I think it's time for me to wrap up this video now. Let's go back here to the very low time frames. You know, to kind of wrap up my thoughts, I think that the damage has kind of been done to Bitcoin. While I do think that it bounces here, I think that it's just going to be just that. Whether the bounce gets up to like 9150, 9250, maybe even 9500, it's kind of irrelevant to me. It's heavy pressure down now from the medium and higher term timeframes. As long as we're below this lower high right here, I'd just be looking for opportunities along these other areas. Of course, not financial advice, not a financial advisor. Overall direction is down to me, and if Bitcoin were to pop back, you know, again, there is going to be tradable opportunities to the upside along the way. But if Bitcoin does pop back above 9150, I'd look for another test back up to the top side of the very short-term range at 9250 to 9300 region. If Bitcoin does, for whatever reason, close a 2 or 4 hour dildo above there, I'd look for extension up here to 9500. That's where things get interesting once again for a medium-term time frame trade. If Bitcoin can close above there, especially on a 4 hour, I would look for extension somewhere between 88 and 89, and then, you know, above 9900. I'm actually quite bullish for a move into the 5 digits, probably 11,000 and beyond. But for right here, you know, things have been kind of, things are looking kind of nasty, to be fair. And while I do think that it bounces up, you know, where it tops out is kind of the next question to me. And then I'll be looking for bounce along the way to the downside, 8,700, then 8,550, then 8,150, then 75, then 69. And we'll get to that bridge when we cross it. I want to see these major levels down here. I'm not necessarily like calling a move there. I'm just saying that if things do get there, I'm interested. But I would like to see it in real time before making any other substance, because we're way far ahead of each other right now, or getting way ahead of ourselves right now, at least for my own comfort. So I think that's a good place to kind of level off this video. I want to take a second to wish you the best, and the happiest of the happiest. And I hope everything's going well on this lovely little weekend. So take care, and until next time.